one of the interesting things about the crisis and the putative recovery from the crisis is we're left with a lot of uncertainty about the future, and maybe the only thing we can predict with certainty is that there's a lot of uncertainty. But your team at KPMG have been looking at potential trends which might shine through this, some important trends which might help shape the future of the insurance industry. Would you like to talk a little bit about some of these trends and how you see them affecting the challenges and opportunities for insurance companies?
Thank you very much. So that uncertainty is exactly why it was that we wanted to focus on some of the big issues that are out there facing insurers, because as you can tell from my accent, I come from the UK, and it feels at the moment as though we don't know what direction our economy is going. Most recently, our economic forecaster was talking about, is the economy zigging or is it zagging? And the one certainty it felt that insurers were having to face was an increased burden of regulation. And with that uncertain outlook, we felt that it was timely to focus on what we've described as some of the megatrends potentially driving demand for insurance. So things like the changes in population demographics. People are living longer. I was talking to an actuary earlier on this week about what he describes as the rectangularisation of mortality. So at one stage, we used to have sort of peak mortality and relatively few people used to live through into their 90s, particularly with some of the medical advances, particularly detecting more cancers, particularly with heart disease. We're now seeing much broader cohorts living through into their 70s, 80s and 90s. I have to say, some people say, well, does that mean we're all going to live forever? Well, people just seem to decline by the time they get to about 90, 95. So that's why those statistics now look much more rectangular. So we're living longer. The other big trend is that, particularly if I think about Southeast Asia, and that's where I've been based for the last 3 years, big changes in the incidence of childbirth and the role of women in the economy. And that's also having a really significant impact on the demand for insurance. So, for example, if you look at Korea, the rate of childbirth in the population has dropped almost half in 10 years as the population has become more educated, more women are entering the workforce. And really, as you're getting smaller populations, people can see that they need to save for retirement. That really creates the environment that's got a lot of potential for insurers. So that's one piece of the equation. Thinking about some of the other things that have a less positive potential, just thinking about some of the changes in the environment. Relatively few people now question climate change, but the other big impact is not only what's actually going on in the environment, but really as populations are getting wealthier, as we're getting more urbanised, that's actually creating greater exposure to risk. We sometimes talk about the shape of risk changing. So clearly that's something that insurers need to be very alive to. And that poses really significant issues. I mean, around the world, lots of different models adopted in terms of dealing with some of the risks like flooding. I've just come from the UK where, yet again, we have lots of pictures of the country underwater. And the agreement between the government and the insurers that has let everybody actually buy flood insurance in the open market looks as though there are real difficulties in actually reaching agreement on that going forward. And some of that is because where we find ourselves in 2012 is that governments really just have very little room for manoeuvre as we come out of the global financial crisis. What else is going on? Well, lots of technological change. That can feel like both a blessing and a burden. So everybody these days wants everything to be on 24/7. We've gone from wanting to deal with things online to wanting to deal with things through smartphones and tablets. What are insurers doing to actually make sure their products are front of mind for their consumers? But also importantly, as customers are interacting with them in the digital world rather than face-to-face, that leaves a vast array of data. And a lot of the more forward-looking insurers are starting to mine that data, starting to use it to predict not only how to price their products, but also how to design them, and actually really starting to tailor products to meet customer needs. And there's also a huge change in individuals' preferences, a really significant loss of trust post-global financial crisis. I was reading the papers as I came over, and there was a short piece in the comment column, which was the co-chief exec of Deutsche Bank saying how unfortunate it was that at social events nobody wanted to talk to him because he was a banker. Well, some of the bad news for insurers is that if you look, for example, at the Edelman Trust Barometer, which measures the public's trust in institutions, I'm afraid to say that insurers are grouped with sort of broader financial services institutions. They are even less trusted than banks. So that's a very rapid tour around some of these issues. And it seemed to us that these had both the potential for growth, but also some very real issues and threats. And so what we were trying to do was to find a way really to present some of those issues in a way that was lively and compelling, and that was also functional and practical, so that insurers could look at what it was that they were doing to address some of these issues.
Some of the major trends you did identify, such as trends in population, which is obviously not only going to generate potentially demand in the near future, it's going to affect the age distribution in the long term, and maybe exacerbate some of the aging population issues which we've got in the US. That one, the global climate change, is another one which has some interesting implications about how risk is transferred between people and what's the government's role in bearing part of this risk. You know, for example, if we can imagine climate change will change the values of properties in different locations, it might make some locations uninhabitable, and they are risks which are of a mega duration.
I was going to say, and they are really difficult risks, I think, to see quite how they are addressed. So it involves dealing both with governments, dealing with corporates, dealing with individuals, and quite what the forum is to resolve some of those issues, I think, is actually very hard to see. Mm-hmm. So thinking about some of the flooding that took place, well, clearly lots of issues close to home here on the northeastern seaboard, but also in Australia last year. There are a number of government commissions looking at those. I mean, the thing that was quite extraordinary is that some insurers were providing flood cover for their customers and others weren't. Mm-hmm. And not really any very clear answers as to how some of those really difficult issues were going to be addressed. And I think the one thing that we can see is that there is the potential that they are only going to become more significant, and that's not only because of some of these trends in the environment, but also just because of the pace at which populations are urbanising. So that means that the concentrations of risk are really building up very, very significantly. And one of the very interesting examples of that, I think, is, I've got to get my years right, so the floods in Thailand last year, where I think a lot of people thought of Thailand as a holiday destination. They think of it having very beautiful beaches, and I think they probably think of it as still being a largely agricultural country in the middle. Well, actually, there's a huge amount of consumer electronics assembly and manufacturing that takes place there. And the thing that was particularly critical was that in the early part of the year there had been the terrible tsunami in Japan. And so a lot of those Japanese light electronics, even sort of hard disk manufacturers, were able to shift their supply chain out of Japan, because they had the issues with power outages, into Thailand. And Thailand had significantly greater exposure to flooding than I think perhaps any insurer had expected. I mean, it's actually a great success story for the insurance industry.
So that's a good example of how when you think about these potential trends, we can make strategic decisions now to anticipate what might happen and protect ourselves to manage that risk. Can you give some other examples of opportunities which might be available to insurance companies, given the distrust in the insurance industry these days, or maybe things they can take proactively to address population change, either to defend against it or find opportunities in it?
Well, one of the things that I think is very interesting are some of the trends around microinsurance. So I think some insurers have historically really had some very significant questions around, well, what does this mean for us? Is this real insurance? Is it something that actually fits our business model? Insurance has got huge social value. Mm-hmm. And if you think about it, part of the role of insurance is to buffer risk and to transfer risk. Well, it's got very significant practical implications for populations with really on that first few rungs of the ladder. And there are some very, very interesting practical examples. For example, in Kenya, where we've seen crop insurance developing, but it's a very, very smart product. So it's a smart product that actually is paying out on an index. So if your crop is subject to frost, and so it's going to be damaged, you don't actually have to prove loss, because there are statistics out there. And a lot of this is actually transacted through mobile phones. It's a great example of insurers being forced to be very lean and nimble. And one of the things I think is very interesting is whether there are applications for that actually in the more developed part of the world.
Yeah, this is really interesting. I mean, I was recently looking at the World Bank's vulnerability index across various countries, and people in maybe some of the African states, some of the poorer Asian states are very, very high on this vulnerability index. Now, it seems to me that the capacity of the insurance industry is going to be stretched when it comes to talking about some of these mega climate risks. But that same capacity could add immense social value for a lot of the microinsurance programs you're talking about. But is this a viable economic model? Are the numbers there? Does it have to be driven by profit? Or there are some other models by which the insurance industry can participate?
I mean, I
here?
think a lot of these programs are initially being catalysed through NGOs. I personally think there is a role for insurers and for insurers to make profit from this. But I think what it does do, it does force them to live within very slender means. Mm-hmm. And that's something that I think is going to become increasingly important. Really, there's a huge focus on more customer-focused products that are focused around customer needs. And I think insurers that can take cost out of their business model, I think are some of the ones who are going to be best positioned for the future.
Yes, because some of these products, the denomination of them
Are
is
absolutely
tiny,
tiny.
isn't it? It's
Absolutely
you know,
tiny.
maybe a $10 premium or
Yeah.
maybe less than that. And with that, you've got to provide cover and the distribution as well and the claim settlement, everything involved in that.
But there are really smart things that you can do through some of the mobile payments through a mobile phone. There's a great example where you can use the camera on the back of a smartphone to swipe the barcode on things like your bags of fertiliser or your bags of seeds.
Mm-hmm.
What a great application of technology. And if you think how lean that is, it's taking a lot of the intermediaries out of the process, and so is taking cost out of the process.
And are there messages there which we can bring back to
Well,
Europe, bring back to the United
I think
States?
is one of the most interesting examples that I've come across.
Mm-hmm.
I really think there is more that can be done. I mean, as I think I mentioned, I've spent the last 3 years living in China, and there's much, much greater willingness and propensity to want to transact things mobile, using mobile payments, for example. I think here certainly in Europe, where I come from, there's a little bit more reluctance to do that. But I think we might find that in future there isn't that much choice. I mean, particularly given some of the economic uncertainties that are out there. And thinking about, well, one of the questions we posed is insurance investable?
Mm-hmm.
And, I think a lot of investors have some really hard questions for the industry. And in order to achieve attractive returns, I think insurers are going to have to become much more nimble, much more agile.
Mm-hmm. Well, I think the exciting thing for me about reading through your report and your deliberations is the old saw that there's always opportunity and challenge, and you're really mining those opportunities.
I was going to say
here.
we were trying to be very sort of even-handed.
Yeah.
So, I mean, the history of this is... let's see whether this is going to work or not. So, at KPMG, we spend a lot of our time focusing on regulation and capital management. And I found that I was in China trying to talk to executives from state-owned insurers. And, OK, they have a regulator that has very significant powers, but that's not how you're going to capture their attention. And so I needed to talk to them about what were they doing, what could they do to achieve further growth in this country that is changing in some ways is changing very slowly, but in some ways is changing very, very rapidly. And that was the genesis of the Intelligent Insurer. It was something to really act as a catalyst for those discussions and sort of break us out of the regulation and capital management, which are important, but they're not the only thing that's important.
Mary, thank you so much for doing this, and good luck with the development of these ideas. And I look
Thank you
forward
very
to
much.
hearing some more of them.
Thank you.